Hi, folks. This is Lee with the Market Sense. This is the week of October 10th, October 29th, 2019, almost Halloween. And the charts in this presentation come to us from the Trade Navigator software that's provided by Gettess. And this is a weekly bond market chart. You can see the volatility has been shrinking substantially here the last couple of weeks. That normally precedes a breakout move of some kind. Doesn't really predict the direction, just that there should be a fair magnitude move. And it certainly looks like that move is occurring to the downside. I mean, we were looking at the potential resistance this week being around 160.24, and that's the green line in the middle there, right in there. And they haven't even been close to that. So, they don't look very strong at this point. However, we have scheduled mayhem this week. That is, we have both the FOMC meeting adjourning Wednesday, where they'll announce if they cut interest rates or not. And then we have the employment report, the monthly report, Friday morning. So kind of a nasty week here, but especially the Wednesday afternoon for the Fed meeting. Nothing they do before then really matters. If anything surprises the market from that meeting, that'll be the direction they go for at least the next 36 hours. They've already broken down through the support here. This mid-Keltner channel is around 158.16, I believe. And they're certainly looking like they want to go below that. But we've got the previous swing low here at 57.17. So clearly breaking that should be significant. Now, I say that it is awfully common for a market to go back and test what it broke out from, which is not that much lower. It's just around the 156 here. So, there is all kinds of layers of support that could hold them, but this looks like the beginning of a potential breakout here. The thing is, again, if they are surprised by what the Fed does, this resistance up here is all the way up to 160, 162.18. Man, they could be above that in no time. You can't get married to direction here. It looks like they want to go lower, but you're probably going to get a substantial move after the Fed meeting. And, who knows? Maybe they're nervous until the employment report. But I think Wednesday afternoon will probably give us our big clue. Stocks, well, the volatility there is shrinking also, but this is a different situation. It's shrinking at new all-time highs. That clearly means that they're struggling up here, that there is what could be considered resistance. But if you've listened to me for any length of time, I don't consider resistance at all-time highs resistance. It's just stuff to monitor, see if it holds, because you are not going to make a living selling market, making new all-time highs, and that's what they're doing at this point. I can't lie. I see signs that they could roll over here, but I'm not going to sell it. We can get a chance to sell a retest if that's what they want to do. The amazing thing about this week is last week didn't exactly blow out. It is a breakout above things here, but not really a blowout. So you would expect the support here around 30.09 would potentially be a good buy. Gosh, they haven't even come close to that. They've just opened higher and kept going. I can't see that lasting really, but again, same thing that impacts the bond market will impact this market here. The Federal Reserve meeting and the monthly employment report could both provide a bit of a jolt. Fed probably being a bigger deal. The thing with the Fed meeting is I think a lot of people expect them to cut interest rates again. Maybe they will, maybe they won't, but what are they going to say? How are they going to suggest forward guidance as to whether they're still looking, they might do more, they might not do more, they're done? I mean, there's a lot of things that could come out of this meeting that would be a shock to the market if people are just thinking we're in a cutting cycle and that's that. I don't think that's what the Fed's going to say. So, we can talk numbers here. They could be down to the green line there is at 29.80 if they decide to break the 3009 level here. 29.80 is the next level down here, and there's another level all the way down at 29.39 down here at the lower moving average. All of those things are possible. They could break down to that, but the important thing to note, they're at new all-time highs. You do not sell a market making new all-time highs. Please remember that. So that's what we've got for you today. I hope you can find something profitable